Good morning and happy Friday. Nearly all green on the screen here this morning as the agricultural markets await the weekly export sales report and the August employment data. This employment report is expected to show the U.S. economy added 75,000 jobs last month and is the last jobs report ahead of the next FOMC meeting here in less than 2 weeks. Markets right now are placing about a 100% chance for a 25 basis point cut in the Fed funds rate at this meeting. Corn right now is two better, about a penny or so off the session highs. Soybean prices are steady to a penny better. Meal is a buck and a half higher, while bean oil is up 5 points. In the wheat, that is right now 2 to 4 cents better across the three classes. Yesterday afternoon, StoneX released their estimates for next week's USDA reports. While lowering their corn yield 1.2 bushels per acre to 186.9, they raised production 254 million bushels to 16.577 billion as they adopted the higher acreage data from the USDA in August. Their current production forecast is 165 million bushels below the USDA forecast in August. They also cut their bean yields from 53.6 to 53.2. Their production forecast at 4.257 billion is 35 million bushels below the USDA. We'll be out with our production estimates on Monday, likely not to change a whole lot from the August forecast, at least the yields, where we had corn at 185 bushels an acre and soybeans at 53.1. As the old crop marketing year winds down, I'm leaning towards slightly lower corn stocks. Yesterday's census export data from July at 245 million bushels. That was nearly 20 million above the weekly inspections, suggesting exports right now at 2.82 billion bushels is still 30 to 40 million bushels too low. Usage for ethanol, however, is likely to be trimmed another 10 to 15 million bushels. I suspect old crop bean exports will also be raised about 5 to 10 million bushels. While wheat sales have been strong, so is the production prospects in the southern hemisphere. So after raising exports 25 million bushels last month, I look for the USDA to stand pat this month. Seasonally cool, dry conditions for much of the nation's midsection over the next 7 days before a warm up by the middle part of next week. Dry conditions of late here in the Mid-South and parts of the Eastern Corn Belt has led to a modest increase in drought readings, therefore the lower crop ratings that we've been seeing. However, they still remain at historically low levels due to drought readings. December corn has near-term resistance at this week's high at 424.25, about 2 cents above the overnight high, with major resistance at the 100-day moving average near 430, with prices well over $4. I suspect the market is right now trading at least a 200 to 300 million bushel cut in that USDA production number, with ending stocks falling back below 2 billion bushels. Still some uncertainty on the Brazilian production as well, 24-25. USDA has still got it at 132 million metric tons, well below many private estimates, right around 140. Yesterday, Nova Beans rejected trade below both its 50 and 100-day moving averages, managing to close back over that 1030 level. Not much follow through overnight, but at least we did hold support on a retest of that 100-day moving average in the Nova Beans. Would not expect any new sales to China in this week's update as they continue to source their soybean needs from South America. However, sales to other nations should remain strong. October oil pretty much clinging to its 100-day moving average overnight. Same for October meal and its 50-day moving average. New crop crush margins have stabilized around $1.60 a bushel after recent collapse. And just a little bit of a technical bounce in beans. Russia's ag ministry claims they have harvested 100 metric tons of grain versus expectations for 135. Recent rains are keeping Argentine prospects high in Argentina. Thanks for listening, everyone. Have a great weekend.